Last year's rally in gold was driven by recession fears, by geopolitics, and also monetary policy easing. We've also seen the US-Iran situation escalating in the beginning of the new year, driving gold to fresh multi-year highs. But all the geopolitics are being really discounted from the market. Brexit is doing quite well. Trade deal is going to be signed today, with some details, let's just say reports, indicating that there's going to be further deterioration with tariffs being discounted further in the next few months. And again, of course, US-Iran situation is also de-escalating, right? And that suggests that the gold could go down. Now, if we also consider into the lagged effects of monetary policy losing, that should support the overall global economic recovery. That should also see gold moving to the downside. However, banks are going to increase demand. They diversify their reserves away from US dollar assets, right? So there is, of course, a weighing basket here now that we really need to see which components weigh more than the other in the near future. Now, my technicals indicate that there might indeed be a further move to the downside, right? Because we've taken it out the 38.2, we could go down to 0.5, right? Because we ended wave 5 over here, right? And that now seems to suggest that we might see a correction moving down. That will depend on, in 2 weeks, in about 2 weeks, we'll have the Fed decision. That will depend on that as well. Now, if they remain without changes, it means that this is going to support the dollar and having the gold moving lower. What I'm seeing here, because I'm still expecting from a technical perspective another move to the downside. However, I'm still not seeing any signs either for a continuation to the downside or for the continuation to the upside. Okay, I don't see anything on the RSI and the MACD. All I can see on the MACD is that we have a very nice ascending trend line here, right? And I am really expecting gold to move a little bit lower, take out this price over here, and then start moving higher for potentially ranging around these levels, around the zero line. And while I'm seeing that, I keep thinking that this may be an ABC, then another ABC, then another ABC, which is going to make gold a little bit more complicated. Okay, the projection, however, could change. We could have simply as we are here, we could have an ABC, and then we could move all the way up to fresh highs, okay? And this fresh high would be anywhere above the 1610, pretty much, right? Or the other scenario could also be, because I never really saw this move up here as impulsive, right? Which suggests two things. It's corrective, which means that this is going to turn as an ABC, and that means that we'll have another ABC, then another ABC, and this is pretty much going to end as an ending diagonal pattern over here, right? And 3 will move up there. Or this is 1, 2 of 1 degree, then another degree. We'll have like 3 degrees here playing out, with the 2 already having finished. So these minor or minute degree is still on wave 3. This is wave 4. And then we should get to wave 5. But I am going to be honest, I'm not seeing any signs either to the upside or to the downside as we speak. I'm a little bit bearish in the short term. I'm expecting this level to be taken out on the MACD. We're not expecting anything apart the details on the US-China trade deal. I wanted to check the oil as well today, right? I've been looking at the longer term a little bit on both. Because of this signal down here on the MACD, this is some sort of bullish bias signal, which could actually indeed move a little bit lower to create a better buy opportunity, right? Once this happens, it means that prices are going to move a little bit lower. We could go down to the 56 or so, okay, with an ABC correction, and then move all the way up to take out the 65.42. Now, that being said, let me explain what I'm seeing here, okay? I've seen an impulsive move to the downside, and now we are correcting. and we're expecting prices to move lower in the primary degree. So we had wave 1 here, wave 2, and then 3, 4, and 5. This wave over here looks to me like a nice triangle, right? So we had ABC, ABC, WXY. We're going to have another ABC and another ABC or WXY, which means that in the current market, we're most likely going to see a further decline to take out a fifth impulsive move to the downside. Correct up to the 50 or 61 Fibonacci extension, and then move all the way down to meet this trend line over here. The moment we meet that, we're going to see a bounce, most likely, right? And go all the way up to take out again the 61.8 extension of B and C, which is the 65.42, which happens to be also the 61.8 extension of waves A and B, okay? 65.42. As well as the descending trend line very near the multi-year descending trend line, which is probably going to be expected, right, to cross above this triangle pattern anyway, because wave E of a triangle is usually breaking out of the system to create a throwback effect, and then we should be seeing prices to go lower. Now, yesterday we've seen prices decreasing, okay, and that was because of the poor API report. There were crude oil builds reported. Today we're expecting the EIA to report its own stock inventories, and this is going to be what will determine, at least in the short term, the prices of oil.